Well, good day, all. Ira Epstein, and here we are with your metal market wrap-up. And by the way, I'm wearing today, what is this? This is my Kindig. You ever watch that show on TV about cars? I told you I'm a car freak. So it's one of those, I happened to go there. I saw the cars. It was just a fabulous experience to see how they build them and all. But to make a long story short, my friends, this is about the metal markets, and they've seen a bit of a rebound, and they're continuing with it tonight. Gold up another $6, silver up nearly 12 cents. The copper market's finding its footing. I think anything near $4 is a bit too cheap in the marketplace in copper, and the platinum market up 9.9. Now, you know, this is the week we're going to get the tariffs, the new ones, set in. This is the week where the president has to make decisions about what to do about Russia. I think the gold will get a bid under it because of that, because of the worries, the concerns, how it'll be. There's questions as to what that means for the energy market. Is that slipping back? And you're very stable in the bonds and notes. Are you aware that you're under 4.20 in the 10-year note? Now, in terms of data tomorrow, we get more than we usually do. We're going to get the trade balance data at 7:30. Today, you didn't have much. You had factory orders, and that was it. Redbook Group's going to update their retail sales, as they always do on Tuesday mornings. S&P Global Group released their final, and the word is final, service sector PMI at 845. The ISM will release their July service sector index, a singular number, and the API Institute will release their member stockpiles at 3:30 in the afternoon. Now, I'm starting a new feature that people are starting to respond to, and in my morning subscriber video, and it's the only place that I'm going to do this at this point in time, you write a question, and we call it the mailbag. And in the mailbag, I will take a small amount of time, put it right at the beginning of the video. If you want to skip it, you can. If you want to see how I answer the questions as they come in, away we go. I don't know if I'll answer the questions every day or not, but they certainly will be as they come in, and I won't let a week go by where I don't answer. You just go to iraepstein.com research to sign up, and this is where you get my specific coverage of 40 charts in the morning. In the futures, you can even get the Spider ETF where I cover 40 specific buy, sell, hold recommendations, okay? And we track them from beginning to end all the way through for you. All right, so in the gold market, let's take a look at what we have. We have a market that's retreated from its high, came down, didn't make it to the 18-week moving average, and it's trying to come back up here. When we look at the overall action in the gold, we see we got up to the 3,500 level a bunch of times. You got through here, in fact, in the D's gold, closer to 3,600 if you look at it. Fell back in, didn't quite get down to the 3,300 level, and you're sort of trading in the center of this correction phase. When you look at the chart action on the swing line, what you see is you've got a higher high and a lower low pattern. In other words, the market's through with the break, but we don't know that this is a bounce or the beginning of another rally. Hard to tell right here. What has happened is the market for the past two sessions, not including today, has come back and fighting a battle at the 18-day average of closes, trying to get over it right now. The Bollinger Band, the black dashed line right here, and the green dashed line, which is the 100-day average, held the market. And that was the first retest of that in a very, very long time. For the Bollinger Bands, you have to go back over here to April. You have to come back over here and here. You do test it from time to time, but most of the tests have been successful and have ended up with the market rebounding as it's doing right now. Momentum has turned up. So as I see the chart action, you're caught in the Bollinger Band bottom to top. That's the first thing. Number two, the market had momentum down. That phase is entered. You're getting a bounce in the market. It would not surprise me to fight a battle on the daily chart at the 18-day average of closes at 34.1170. And if you can get a oomph to the market, why not make a run back up here, all the way back up to the 34.86 level? And that's getting very close to these old 3,500 numbers. Got it? I moved today and put the D gold versus the D silver as the gold silver ratio. Why not look a little longer term? Currently, on a daily basis, the gold market is stronger than the silver. It's not that way on the weekly chart, but it is on the daily. In the silver, you've gone from the upper Bollinger Band, and during the time I was gone, you fell to the lower band, and now the market, like gold, is trying to find its way. It hasn't gotten stronger than gold, as it can't even make it back yet to the 18-day average of closes, but it is in oversold territory and has downside momentum. In the copper market, you come all the way back to where you were in April. And you do remember when the president, with the Liberation Day, that he started the tariffs and then telling the world what he was going to do back here as copper took off with the 50% tariffs. And then this whole break has to do with him removing refined copper from that. But you had a squeeze play develop. You had an upset at the London Metals Exchange as the copper was being sent to America. And just imagine if you hedged your copper on the way up here, and you own it at a much lower price. I mean, the miners should have made a lot of money, people that owned that copper. In the platinum market, lower highs, lower lows. You've gotten back down over here to the lower Bollinger Band, and you're finding your support. So basically, like the other metals, especially the silver, you've gone from the Bollinger top to the bottom, and you're trying to get something in the way of a rally. Are any of these markets screaming buy me? None that I can see. I want to make that clear. I still think we're at the point where the metals are waiting to get interest rate cuts, and now there's nearly a 90-some-odd% probability of a September cut at the CME Fed Watch page, and they're already in September at nearly a 66%, and December's getting one. So they got 3 meetings that the trade seems to think that if the data, the labor data, weakens a bit more, that the Fed is on path to cut rates. I think that is what will do the job to send the dollar lower again, and then maybe get the gold market going up from there. In the dollar index, we've had a rally that culminated in getting to the 100-day average in the Bollinger Band. If you're a regular watcher of mine, and I hope that you are, and you give us a thumbs up, you know what I teach. When the market makes the first attack of that, that's where the pro is waiting to come out. I teach that when you don't have an embedded reading, the first time you hit a Bollinger Band, and especially the 100-day average, to cut together. That is where pros like to take money off. I think the pros began coming out right where I'm pointing up here, and it went a bit higher on them. That's okay. It was the zone. So you put it all together, you come up with a game plan. I hope you join me in the mornings because you get a lot more than you do in these videos. In the meantime, I'm Ira. You have yourself a great evening. Watch the other videos tonight, and I'll catch up with you in the morning. Take care.